Wednesday, November 19th, market analysis, Stan Ehrlich. Good afternoon. We start out with stock indexes and go to futures and several stocks and general market commentary, psychology, technical analysis, variety of topics. We had a little bit of a rally today, about 2-3 points on the spider, which is my benchmark in the NASDAQ. And I watched very closely the Dow as well, and those are my three indexes. Yesterday, we started to get oversold, and we came very close to a support range, basically the lows that occurred on October 10th. And up to about a week after that, there's another low on most indexes that is the same ballpark. So that's your little zone, those two lows. For the MES, it's October 17, October 10, those two lows. We almost touched the higher of the two, the beginning of the zone of support, which also stretches backward in time. You can see there's a whole mess of other highs right in that same price range until finally it closed above it. Then it became support, which still is support. So oversold conditions at support levels are one of my favorite combinations for a bounce, but I'm bearish. I'm looking for the October lows to get broken, very possibly this week. I've only got 2 more days, but I would expect as much next week. In the meantime, as I said yesterday, because we started to get oversold and test support, we could have a short-term, very modest rally. Shouldn't go up much at the very most, 50% rally from the highs that we did see on October 29th. And I do have a bearish engulfing ER red sell signal on that day, and I said so on that day. Plus, we got another one the next day. Rarely do I get 2 in a row. So far, they've been working great. That's the reason for me to be bearish. Normally, I would be expecting the October low, which happened on October 10th, but it didn't go very far. And then I would be bullish for for November, December in general. Now, we do have coming up the Santa Claus rally, which is going along just a little bit before Christmas and getting out early January. I'll detail to the minute on which days, at what time, with the historical records, when to buy the spider, I believe we're tracking. So that's right after Thanksgiving, and I will be gone next week for all of next week, Thanksgiving week. No YouTube market analysis. So let's look at the 1-minute chart for the spider today, yesterday, and part of the day before that. Basically sideways. We did manage to come very close to the high of yesterday, stopped, came down last night and sort of during regular market hours, 6:30 California time to 1 o'clock, close to previous lows. Nothing broken, closed a little higher, no big deal. I don't see any reversal. It could bounce a little bit more for only a short period of time. That period of time could be maybe have happened today. I can't tell. But I'm bearish and I'm looking for lows under and probably substantially under the October lows. And for the SPY, that would mean coming down to approximately 630, low 630s. And we're 662, so about 30 points lower from here. But I'm not so sure that's going to stop it either. There are other support levels at lower levels that I think could be reached, maybe going into Christmas. Next, the spider, 1-minute chart, sideways, couple days now. A little higher high today than yesterday. Didn't close much stronger. Didn't make any lower lows. Tried a couple times. Next, we've got the QQQ. Got oversold. Came down, tested supports, not very accurately, but pretty close. Bounced a little bit today. No change of opinion. Maybe we'll see just a little bit more bounce, but I don't trust the rallies, and I'm going to try to call the downturn the day it happens. Next, QQQ, which is what I try to do all the time, last 3 years on YouTube recordings, market analysis. So, same comments for the triple Q. The NQ came down very close to yesterday's low, which is touching the beginning of some support. So that's not a surprise. It's not a surprise that we touched support and we were oversold. That we bounced so-so today around yesterday's high for the close today, current quotes. And I think it could rally a little bit more, like I've been saying about the other indexes, but not very far, not very long. Maybe I've got a number here at the 25,394. Next, MNQ, 1 minute chart. This is also including aftermarket, a little bit more strength. Next, YM, almost unchanged, almost a lower low. I think it may have made a lower low by a few ticks, but it's just beginning to bounce off support. Now, it never did get oversold. It came very close yesterday and today, but not quite. But you do have the support level. And I do expect it to bounce with the other indexes, although the YM may make new lows to move down first before the other two. Next, YM, 1 minute chart. And now Russell. It's a different animal. We are getting oversold for 3 days in a row yesterday, but not today. Came very close to the downside objective because of a small double top, and that was 2305-ish. And we got down to 2321, looks like, bouncing slightly out of oversold condition in a very broad, wide support and resistance zone that goes back years. Now I'll show you. Really started to develop in January of 21. This or a yellow zone where a market has bottomed out and topped out in that area many times, and it's doing it again in the last couple of months. Next, Russell, 1 minute, sideways. Next, we've got bonds. The bond market is coming close to that support area again, but this time it's closed at the lows. I think tomorrow it's going to break below that low. I meant the support and those lows. Maybe it'll get down tomorrow to as low as 115.24. Wouldn't surprise me. That's the next area of support. And then generally, and this is kind of a wide area, I expect it to come down, say, at least to 14.5, probably below 14, 13.5 notes. Lower close, doji, getting stuck here in a trading range, looking for support to get broken. Downside objective should be down to 110.12, but not acting that bearish at the moment. I need a downside breakout again below 112.09. Crude oil bumping against resistance, doesn't seem to be making any headway upwards. Lower highs, lower lows, and that's exactly what I'm about to see. I expect a new lower low tomorrow and Friday, and probably a move down to 55.80, and I wouldn't rule out by any stretch of the imagination 51. Next, support is holding in natural gas. I am still intermediate to longer term bearish because of the head and shoulder top and because the downside objective is 2.2 something. Now, it has to deal with the support, which has held once, twice, basically 3, 4 times now, when it gets back down to about 3.8 and a little under that. So it needs to break below that, and then we're on our way to the final leg down to my objective, I would expect. Heating oil dropped off sharply after a minor new high. Now, normally yesterday's big up day, breakout, new high close, closing above old highs for months is usually very bullish. But I pointed out the fact that it got overbought in the process, which is not that uncommon, but you got to be very careful about that situation. If you dip a little bit, I would have expected something back to the high a week or so ago, 25.45, but it went a lot lower, but it didn't close below that. It held closing just a little lower. No engulfing bearish or anything like that, although it came close. So I think it might dip a little bit more, but I think we're on our way up to higher levels. It just has to shake off this overbought condition and then start to resume moving its way higher, I would expect. I can't really get bearish at the moment. Gold bounced, no change of opinion, expecting support around 39.20-ish to be tested, then probably down to 35.95. Next, silver. New high, not particularly great close, around the high of yesterday and the day before. We still have the double top. There is no downside breakout yet. That will happen after it closes below 45.62. Then we have an objective to look forward to at 37 and small change. But I need for this to turn back down, and I expect it will soon without rallying much more. Next, we got platinum. We had a bearish engulfing at the top of the rally. Unfortunately, it didn't quite get up to overbought. As a result, no bearish red Ehrlich signal, ER sell signal. Nevertheless, the bearish engulfing did cause a big break the next day, and then a couple minor moves down Friday and Monday, Tuesday, and today, Wednesday, another tiny move down. Nothing happening. There is a trend line that's holding. We need to close below this line. Then we probably have another test of previous lows at 1480. And that'll probably break this bull trend line, which is more profound over a longer period of time. And I'm really looking for a move down into the ballpark of, I don't know, below 1370. We have a little bit of a bounce today in high grade copper, but there's basically no change of opinion. I think it's in the process of topping out. And I'm looking for this support line, which I think might be a neckline. Now, if you take this high, it's a little under the highest high by a very small amount, but it is. And you measure the amount of time from that high to that high, and then forecast into the future. We just had it yesterday, the same timing point. That's when the last shoulder high frequently occurs about the same amount of time from the left side to the right side. So we're slightly late, but that's no big deal by one day. But if it's more than, say, a week plus, that would ruin the pattern. Plus, I don't want any more rallies above 5.16 something, because that was approximately where the first shoulder was and the second shoulder has been. It's just happened apparently about 2 or 3 days earlier than expected. If we cross this neckline, and I'm going to call it that from this point on, fast and furious, especially with a down gap, then there'll be a classic downside breakout, and I will have a downside objective to the lows that we saw the day after the big crash. We'll see what happens. Head and shoulder top, I think. Soybeans dipped off after testing a support level that's pretty profound, old, didn't get overbought, but banged into resistance. And then, did I say support resistance? I expected to dribble back down to maybe 1120, and I can't rule out something a bit lower, but probably not below 1093. Soybean oil closed lower, but it's been coming up pretty darn good, and it almost got overbought for the first time since late July. So maybe it'll dribble back down to the trend line and support, which is around a little bit below 49, 49 and a half. Remember, it's going to take a few days probably if it gets there in the first place. I'm bullish on all of the grains. This is a correction in a longer term bull move. We did break out of a very nice downward sliding channel. Pardon me, downward sliding channel. So I am generally bullish and looking for higher levels. Oh, and a few days to maybe a week or two at the most. Next, soybean meal. Same kind of story. Just got a little bit tired here in a resistance area after being overbought. So a minor downside correction should hold, not too much lower, and we'll see how that correction, how far it goes and how it turns. Next, a little bit of a dip here in corn is holding the fat yellow line, which I believe to be a neckline. This is now March corn, by the way, and I'm now watching March wheat. Um, Head and shoulder bottom, holding neckline. Not oversold though. Doesn't have to be. The rule is you don't want to close below the neckline. That usually kills the pattern. We'll see what happens. I'm looking for a move up right away to new highs. Next, wheat. Little dip also. Hit resistance a second time, got overbought. I could pull back a little bit. Not too bad. There is a small gap to close down around 530, a hair under 530. And we're at 49. So 19 cents. Next, Apple. The bearish engulfing ER sell signal I was optimistic about yesterday failed. We did have a new high today, higher than yesterday's high, and that kills the signal. But I keep telling you many times, these signals are not always the high of a rally like we have right here, and bottoms. And I can't find one on Tesla or Apple rather at the moment. But they are part of the topping out process and not necessarily the highest high, which they are frequently. That's why I love them. I very often pick the turning point for months and months, sometimes years to come. Next, so I'm still bearish. Tesla, we did get the high back here. Then it double topped out. We're on our way down. This little bounce stopped today, right smack at the previous lows, so resistance. I think it's going to make a new low real quick, and I do think it's going to be coming down to 554. Yep, about 555. A little bounce. NVIDIA challenging support yesterday, not oversold yet. Lower highs recently and almost a lower low yesterday. Maybe it'll bounce a little more, but I am still looking for it to move back down. Now, I know there's a gap way up here, but I talked about this yesterday. I think this is an exhaustion gap to the upside into overbought conditions. Excuse me. Came down the next day, closed the gap, but another rally failed to make new highs, was still overbought for the last 5 days at that point, and then gapped down. That looks like a breakaway gap to the downside after an exhaustion gap to the upside. It's really nice to see both of those next to each other. You don't get them that way very often. So here we are, pressing support. I'm looking for a little bit lower, probably in the ballpark of 164.5. Next, AMD does have a very big gap to close at 170.5. Today is a new low and a new low close under the previous lows going back to 1 month ago, October 15th or so. So we're on our way down, and I think it's going to be going to close that gap I talked about, wow, I don't know, a couple of months ago when it first happened. Gaps are almost always closed. You guys have a great day. Remember, I won't be here next week, and profitable trading to you.